Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having an amazing day. We're taking a look here at Bitcoin, seeing what's going on, helping you understand the best practice and big picture, of course, for this coin and effectively what might happen next. It does look like this head and shoulders pattern is working out pretty well. We got this next shoulder over here, followed by a potential decrease. Now, there's no guarantees on that, but we are having a lot of other confirmational factors here with Elliott Wave also giving us a very similar ABC pattern here on the way down. So I think there's a decent chance we will effectively reach somewhere in the range of 29.5 or a little bit lower there to fulfill that pattern. Okay, so again, we will see, of course, here soon, but right now at this point, we can see the price action getting rejected very hard at 31,000. That is a strong resistance level. Okay, so if you're new to the channel, I want to ask you a quick favor. Come on over to our Twitter, help us join, and effectively follow us there, and just get us some interaction. We really, truly do love working with our members and our subscribers. A lot of good fundamental technical data here too. Some quick things to note for my community members as well is the summer package here for Cornix. So a lot of my members use the automated trading through Cornix for the signals. So for example, you got a nice little profit there here for a short recently for Bitcoin, but what I'm getting at here is that this discount is pretty significant. It's good to stock up, if you will, so feel free to get your annual packages there and also, benefit there too. Keep in mind, we do have a copy trading now over on BingX, so be sure to check that out. These trades are copied over there on BingX, so you can go ahead and follow me there as well. Either way, some really cool stuff there if you want to become a better trader. CryptoCash.tech is a site, link down below. What we want to look at here first is foremost is some interesting data here. So with the actual, when we're seeing the price action stay at this level here and having difficulty crossing this plane, we're starting to see less retail data and more whales starting to come into play. So that leads me to believe that the price action could decrease in value here soon because we're seeing that shift in momentum. In other words, whales are more active when the price is coming down than they are when the price is going up. So if you see this last plateau, we saw retail hanging tight there for a few days. Then of course the whales come into play, drive the price action down. Okay, so again, there's no guarantees in that. It's just a pattern, right? But a pattern that you need to recognize and understand. We can also see here that there's less longs being open today than there are shorts. Okay, so that tells us a little bit more about the fact that shorts are kind of starting to come in a little bit heavy, probably likely at that 31,000 mark. We'll take a look at the liquidation data. Actually, no, this is more so just open interest to kind of get you perspective here. Let's see where the longs are at. Longs are hedged right there at about 30,500. So some of them are underwater at the moment. Okay? We can also see the shorts here. Early and late shorts are all in the green. So this is a good sign for the shorts here. I think it was wise to short at that level. I was considering that this morning, but I want to evaluate like we're looking at now beforehand. It's important to not to jump into a trade based on overextension. It's important to look at everything, and that's what we're going to do here. So let's go ahead and finish this up and kind of see what this school of thought is looking like here. So first and foremost, we'll look at the daily here and kind of see what's going on. Some things I do want to bring to your attention here is the monthly high. So 1 month high from last month is 29,800. So 29.8, even though the price wicked down to that exact level, that's going to be a little bit of a magnetic pull towards that. Okay. Now it seems kind of crazy, but typically in most cases, you'll see the retest of those levels when the month is coming closer to an end. We are almost there. We're about 3 days shy of the month end. So I wouldn't be surprised we see the price action pull back to that level in the next couple of days. When we take a look at a few other factors here, we can also see that stochastic is telling us that we have this divergence. The price action should be coming down further here as well. So we're getting rejected off 70 in the RSI. Stochastic is telling us we got that momentous push to the downside, at least a shift in momentum rather. Same thing here with the MACD as well. Even though we're not fully diverged, we are diverging towards that or continuing towards that. So this overextension play is essentially turning itself around. So it would make sense that the price action would come back down here in the immediate near future. Furthermore, as well, if we take a look at the moving averages, we're well above there. So keep in mind, even though the price may pull back, it's not going to be like the sky is falling situation, at least not yet, right? We got a lot of support, once again, at 30,000. Secondary to that, 28,600. But generally speaking, I think 29.8 is the first point. If we break that level, it would make sense to see a 0.618 Fibonacci pullback right here at about 28,600. So if you're going to be shorting, that would be a secondary large profit target. Okay. And I say large because you probably don't want to bank on that. There's no guarantees, but if we do lose 29.8, I think 28.6, 28.7 would be a likely next target. All right, so what we want to look at next here is a few other things. In fact, why don't we go ahead, now we'll leave the Fibonacci levels there so far because they're looking pretty good. We still haven't broken that 31,000 mark. we want to look at the 4 hour and kind of see what's going on here. Again, you can kind of see this head and shoulders pattern. We'll just push this over a little bit. We got the first shoulder, the head, second shoulder, and in most cases it comes back to where it started. Okay. Not the exact same point, don't get me wrong. I don't think we're going to see 27, 25,000. But I do feel, once again, that this range here, 0.618 to 0.786, is going to be an area in which we're going to see the price action pull back. Okay. So that's, again, just my speculation there, and I'm just a guy in the world here trying to make it a little bit better of a place here for you as far as trading is concerned. So again, no guarantees that, but these are some interesting patterns, right? We also got Elliott wave as well showing the same thing. I mean, we get rid of this head and shoulders pattern. It's practically the same thing. We got our ABC. We're still searching for our C. Now, granted, we don't know if this B is the highest point yet, but it's likely to the case. And there's a great chance if that is the highest point, 31,000, we see the price action come back down again to the 29.5, 28.5 range. Okay, yeah, just something to think about there. So what we want to look at is also a few other things here. First of all, the RSIs are looking kind of funny here. We've got this momentous push up for stochastic, and of course the normal trickle down for the RSI. So that being said, we're still maintaining above 50 on the RSI. That's a positive sign. If we and when we lose that, we will once again likely see a continuation lower. We've also got this MACD here, or MACD, really telling us that we're losing that momentum to the downside. There could be a shift in momentum to the upside. Again, that would probably require us to hit 31,000 or higher. In other words, we need a candlestick closure, solid candlestick closure over that level. Okay, that's kind of where we're looking at there. Furthermore, we want to go ahead and double check a few things here as well. We got the 50 on the simple moving average here, right there at 29.6, 29.7. So that really kind of tells us that we have some support. If the price comes back down, we could very well see a bounce once again off 30,000. So some decent factors here, right? This is awesome in a lot of ways. We got some bullish, some bearish, right? But generally speaking, I would say that the sentiment is still slightly bearish, mostly because these candlestick patterns are kind of showing us that it wants to break down a little bit further. So again, candlestick patterns are not 100%, but they are a stronger percentage than 50, if that makes sense. So in other words, you could flip a coin and say Bitcoin's going up or down at any given time. But if you look at these candlestick patterns, you can acknowledge that, hey, the bulls are having some difficulty getting past that certain level. That's why the head and shoulders pattern exists. Then we're going to see the price action pull back a little bit further. That gives us a 60-70% likelihood of that direction. Okay? Again, no guarantees, but I do think that Elliott wave and the head and shoulders patterns are kind of giving us some inclination here that we might see the price come back down a little further. Okay, so what we want to look at next here is the hourly, kind of see what's going on. We got the TD sequential telling us we came up to an 8, wicked out, and we're likely to continue down a little bit further here because of that. Okay, so we had an overextension to the upside. We can also see as well that the RSI is not super overextended, so even though the price action continued in that direction, the turnaround is not like a terrible turnaround. Okay, so let's talk about this here though, because Ichimoku cloud, this is where things kind of get interesting. Now, typically when we have range-bound activity, which we have had so far, the cloud becomes, I wouldn't say nullified, but not super strong. Okay, in other words, it's a good momentous indicator, and really just telling us in all areas here that if you have a long position open, you should have closed it. But bottom line is we're still maintaining above the cloud. But to me, that's not super important or relevant. Okay, I think that that's just kind of, it's just kind of there, right? So we can't really use that. What we want to use instead is a 15-minute time frame here. I'll kind of see what's going on. Now, 15-minute time frame, I think, is my second favorite time frame. 4 hours is the best because it really helps you with the overall sense of things. In other words, we got that momentous shift in momentum here, and we've acknowledged that on the 4 hour. But the 15 is a really good entry kind of scenario here. What we want to take a look at is a few things, first of all, telling us what's going on. So if we take a look at the thing that I like to look at on the 15-minute, I mean, it's really mostly just the stochastics here. So this is one of the bigger indicators that I like to use concurrent with Bollinger Bands. But when we see this little push down here, this little convergence, if you will, this is telling us that the price action wants to recover. Now again, is it going to shoot to the moon because of that? No. And in fact, we are making lower lows now, and that's not a good sign. So what you want to do is wait for this next lower high, and then, of course, consider taking entry there. But this tells us we should be able to see a slight rally to that level, and if we cannot break this higher high pattern here, then we are going to continue lower. So if we do not get above on this next push up, above 30,850, then we're going to go ahead and see the price action pull back down lower. Okay, so again, those are just some things here that we're looking at. Again, is this definitive? Does this tell us specifically which direction we're heading? Unfortunately not, but it does give us an inclination that we could see a slight rally up here, but if we do not get anything higher than 30,850, then it would be probably a good consideration as short. You could even consider a short right now. I would personally maybe consider that, honestly, because it does feel like we're having some difficulty getting past this level. And with these kind of candlestick patterns, it's only a matter of time before the price breaks down. So why not get in a little bit? But again, I would consider maybe some staggered entries. I personally, if I was to take a trade right now, I'd shoot for 30,600 and maybe 31,000 or 30,900 as a second entry to average up. That way the price pulls back, we still get some skin in the game, and if it continues higher, we're averaged up a little bit more. Again, I like that strategy personally. It's different for everyone, of course, but I like to take smaller losses and larger gains, and I think you should too. And it just seems to work very well over the years. I've noticed it works fantastic. So, all right, anyways, just some friendly advice there. So in summary here, I think the candlestick patterns are still holding very strong here, letting us know that further downside would make more sense than upside. Okay. Stranger things can happen, but we're seeing a lot more shorts in the game than longs. I think they know something that we don't, or at least some other folks do not. I think they are understanding that we're seeing some strong resistance at 31,000. Bear in mind, if we break 31,000, it'll probably shoot pretty hard because there's a lot of shorts leveraged likely at that 31,100, 31,200. The stop losses are going to be stacked there. So if those hit, the price will continue up. Shorts will hedge their shorts with some longs, and the price continues higher. So bear in mind, we break 31K, it'll probably run. But until that point, there's a greater chance we will probably see this retest level of 28.5 to 29.8, right in that range there. I think this 0.618 to 0.75 level, or 0.786 level, is going to get somewhat of a fill, okay? All right, I hope that makes sense for you. Oh, speaking of fill, in fact, come to think of it, we take a look at our CME futures. We did actually wake up and close this gap here. So I was talking about this yesterday. This gap has since been filled. That's another exact reason why the price action will probably pull back, just because of that. So something to note, when these things happen, it happens for a reason, and the price will typically reject and fall back once that open, the previous close or previous open is essentially closed. Okay, so again, just some heads up on that one. All right, well, I hope you found benefit here today. Of course, if you want to become a better trader, cryptocash.tech is the site. Link down below. Hope you have a great rest of your day. Again, help us grow our Twitter community here at Cash Trading. We'll look forward to working with you. I hope you have a great rest of your day. Thanks again so much for your time. We'll see you soon.